Hey guys, it's Juan here with West Crypto Portfolio, and this is your weekly crypto market update. All right, guys, let's dive right into it. Happy Yentervention Day. If you don't know what that means, it means that the Ministry of Finance of Japan has officially intervened in the Japanese yen market again. And you can see, if I just hide this for a second, you can see that the JPM2 has surged. And this is on the back of the Japanese yen. Let me show you actually, because uh, pictures speak louder than words. And look at this. It's a huge drop in the Japanese yen, which, if you don't know, when this chart goes down, it means the Japanese yen is getting stronger. And when the Japanese yen is getting stronger, there's more liquidity coming out of Japan. And in this case, it fell right on schedule because this is exactly when we were expecting it. Remember, I've been saying for some time, Japan is probably going to hike rates. That's already done. It's crossed, by the way. They've already hiked rates, and they're probably going to intervene in the foreign exchange market, and they have. Now, what that's left behind, I'm going to elaborate. Just let's get into what it means in a minute. But I just want to note that, yeah, this is the October low that I had been expecting. This is the October low that my forecasting model had been expecting. And this is the October low that my forecasting model for the yen itself and for the dollar had been expecting. Remember, just go back a couple of weeks and I said, the dollar probably weakens here. We're probably going to see a short-term top form in the Japanese yen market. And probably based on the timing, this low might actually hold. Now, I started with this because you're not going to find that on the written issue, which I recommend you read first before you watch these videos, because this hadn't happened yet. I look at this every day. I wake up this morning. I notice a surge in the yen. And just to be clear, a surge in the yen means Japanese M2 is rallying. And when Japanese M2 rallies, 84 days later, Bitcoin should make a low. And in fact, this rally you're seeing right here, this rally that we got right here, that's Yentervention 2. The reason Bitcoin is rallying here, a rally between June and July, is because the Japanese authorities intervened in the yen market 3 months prior. This is the same thing. This rally, which so far this year is the best rally that we've had in 2026, started in late March, ended in early May. We traded throughout all of this. And I know it wasn't the best trade ever, but the timing call itself was this was also on the back of Yentervention. You can see these spikes here. When you see Japanese M2 spike, that means the Japanese authorities have stepped into the foreign exchange market and they're dumping dollars. Specifically, they're dumping treasuries. And then those treasuries are converted into dollars and they use those dollars to buy yen. That pushes higher the dollar liquidity that comes out of Japan. And like I've been saying all along, 3 months later, that marks a bottom for Bitcoin. Now, why did I show you these two? The one in June, the rally in June, Yentervention, and then the rally in April, May, Yentervention 2. Why am I showing that? These rallies tend not to be sustainable. When the Japanese authorities step into the foreign exchange market, that creates a short-term spike in the value of the yen. It temporarily, and I emphasize this word, temporarily, boosts Japanese liquidity, and that so far temporarily has boosted the price of Bitcoin. But it does not lead to a sustainable rally. In order for us to get a sustainable rally out of Japan, or the Japanese yen, in order to turn around the liquidity picture that so far does not look great for Bitcoin, we need more than intervention. We need these interventions to stick. Now, is that going to happen or not? I believe it will. And I believe it will because, as I've been showing you for some time, my own forecasting model has been saying expect a meaningful high in USD JPY. So I believe that this one may stick. This intervention is not just going to lead to a 2 or 3 day spike. The rally that we have here, by the way, just a brief detour, this rally that we're seeing right now, the final days of this rally, as we head into early August, why did I say all along, hey, it's not a significant rally, it's not that impressive? Why is that? Because the only reason we're even seeing a rally is because of the intervention, but it didn't stick. As you can see from the red line, what the Japanese authorities did is they intervened in the yen market. There were soft interventions probably here in late June. That's what marked the low for Bitcoin. Then they intervened much more aggressively here in late July, early August, and that's leading to some strength in the crypto market, but it didn't stick. It lasted for a few days, and then over the next few months, the Japanese yen fell, and when we account for the 84-day offset, Japanese M2 is falling throughout all of August, and all of September, and that's going to lead to a multi-month correction in the price of Bitcoin. On the price of Bitcoin. That's what I mean when I say these interventions, they don't stick. They intervene, liquidity, we get a boost in liquidity that lasts for a few weeks, a month at most, and then we go back down. So far, we don't know if this will turn out to be one of those episodes or it will be different. Will this time be different? In other words, if we zoom out here, we can see 1, 2, 3 interventions by the Ministry of Finance out of Japan that have all the first 2 have led to Bitcoin strengthening during that period of time, but these periods of time are too brief. We need an organic rally. We need the yen to actually rally.